Hey everyone, Tony here again. Wanted to bring it's been about a week or 2 weeks that I haven't done S&P 500, so I wanted to touch on that because I know everybody's freaking out, especially today. Today's Monday, the 24th. Lord. Um, so I wanted to just give a quick macro perspective on this. On the monthly. So I previously do these trend lines. You could probably see it on the first or second S&P 500 video that I did. I'll try to link it somewhere here. And the most important thing that I can see here is everything is obviously pretty much the same. Since I last did the video, this trend line is still being respected. Um, so this is a swing low here from October 2011. Another touch of it, which is respecting that 50 EMA, February 16th, 2016. Then we had another touch of it on December 2018. So you can see every time it touches that 50 EMA, it's pretty good support. And it keeps going up, sees. And we had some divergence here, and but it really didn't listen to it. You can see that we had a higher high in price. Oops. And then we had a lower high in the RSI. So, but then it didn't really respect that. Maybe now it might respect it a little bit late. Who knows? But the main thing that I'm seeing here for me on the monthly, which is pretty huge, is that we have, some people call it an inverted hammer, some people call it a shooting star. We have 4 days until the close. You can see it here on the right. So that is, if it does close as an inverted hammer, shooting star, whatever you want to call it, it's just that candle pattern. And we had one just before it as well. It's pretty bearish. It's pretty bearish. So we have to see what happens there. There's still 4 days in the month before the close of the month. So we have to see just what happens. Again, you never know. It could just keep rallying, but I have a feeling that this whole coronavirus, and there's a lot of delays. A lot of people, a lot of companies are having just uh, just delays, and that's going to cause missed earnings and missed this, missed that, and it's just going to bring, at the very least, it's going to bring some downside. So we can see, I think it's realistic to see a downside in touching this trend line here. It already looks like it's about to break this trend line that we had drawn from this swing low in September 2019, and it was just basically a ray that just continued that. And from swing low September 2019 to was not really a swing low, but to a low of December 2019. So it looks like it may break that. I might have drawn this on the weekly. Anyways, so it looks like we may break that. If that breaks, then I can see support here on the trend line. So I have to refresh my memory. I don't know if I did this last time, but yeah, it would be healthy if we come back down, touch the 382, and then bounce off of that, which the 382 has confluence with the 20 EMA by the time it breaks down, and the trend line. So there's some decent support there at that $300. Let's just round it up to $300, give or take. If it breaks below that, we can see we have a horizontal here at the 61.8, which is the 274 region. So you can say 275. If it does break below that, then it gets a little ugly. But we have the 50 MA that's crawling on up, and by the time if it does break that trend line, maybe the 50 MA will be additional support on top of this horizontal. But we have to see. We have to take everything step by step, and we're on a monthly here. So it looks like this area here for me would be at least obviously a first stop, the $300 level. And if it breaks below that, depending on how gloom and doom everything is, maybe going down to the 274, 275 region, and maybe as low as a 78.6, but we'll take it step by step. There are some a lot of support here, especially this 50 MA that keeps getting. It's been historical support since 2011, I think I said. So if it breaks that, then that could get a little hairy there. So let's go to the weekly. So on the weekly, we have multiple. I don't know why I have. Let's take off everything and just start fresh. So I had drawn this trend line here. It was a 45 that I drew, um, assuming that this was a high. Now, it I think at the time it did break above that. So it's kind of a so basically what's going on here is this trend line here, which makes sense now because on the monthly it wasn't really matching anything. It wasn't touching a low, so I drew it on the weekly. Okay, so now here on the weekly, it makes a little more sense. So we have the swing low, and then we touched here, and just it's basically a ray that just continued that direction. And there was a trend line, so it followed the trend line, support, support, break, break above it. So a resistance for a very brief amount, and then broke above it for a good 2 weeks, maybe almost 3, and then break and then continued break. But now we have this 45 that should theoretically act as a little bit of support. And if it breaks that, then it's just that would be a very steep sell-off. But I don't want to see it that way. I just have it there for kind of like guidelines for me at least. But we can see that on the weekly we bounced off, we're bouncing off the 20 EMA. So a little bit of support there, but I don't see anything too crazy. Now let me draw, maybe we have a Fibonacci that lines up with that. And we don't, but let me add the 23.6. See if by chance it lines up, and it doesn't. So we can possibly, depending how gloomy all this, we can break below that. So let me take that sucker off. And yeah, I mean, it's not too far from the previous. I think the monthly gives me a better idea of what's going on. That 20 MA gets broken quite a lot. So yeah, I can see if we do have continued bearishness, I could see that we touch the 50 EMA here. Or below it, break below it, which would be the 382. So I'd still stick to my guns at the 300 level if we do have continued bearishness. We just have to see this whole coronavirus thing is going to trump any fundamental. I think I said it before. Any fundamental news or just news in general. If it's something as massive and as crazy as coronavirus or wars or anything like that. No matter how good your technical analysis is, it's just going to trump it. So it doesn't mean jack. So if you're bullish, obviously you should be buying if you're bullish. And again, not financial advice, not a financial advisor, but if you're bullish and you think that coronavirus is just a temporary thing, it wasn't that big of a deal. I did see that there was a company in Texas, some pharmaceutical company that apparently, allegedly, had a vaccine for it. I'm not sure how true that is. Let me see if I could bring up a video here. Coronavirus and vaccine. Let's see what pops up. Market. Let me put Texas. I could have sworn I saw something. So a company, Texas scientists say they've discovered, might be this one here, let's see. And yeah, I know this is not really purely technical, so sorry for the slowness here. So apparently Graphics president and CEO says the vaccine was completed this week. So who knows? Hopefully it is true. Because at least from my point of view, and I think most moral people with some dignity, I guess, would want to hope that there's a vaccine for this and we can save some lives. It's great to make money, but not at the expense of people, in my honest point of view. So yeah, hopefully that's a thing, and if that if there is a vaccine, that's going to be some crazy bullish momentum. Now, You know what? I'm gonna go a little crazy here, and you want to see if there's apparently like okay, so it might be a private company. Um, so I wanted to see if by chance there was some stock on that. So okay, so long story short, we have this trend line that's 45 that we have to test, in my opinion, and we have to see how it reacts off of that. Maybe it just bounces off, maybe it ignores it completely, and it just goes off these EMAs. At the end of the day, this trend line here is the main trend line in my point of view, um, and let's see if I can get a better view. Yeah, I think that's fine for a weekly. So this trend line here is historically more valid. We did break briefly here, which was a little scary, but we found support on the 200 EMA on the weekly and came back up. So yeah, this is all obviously evolving, and just with this virus, I mean, just never know. I mean, this could come crashing down. This could again, if there's good news, it could just keep rallying up. So I think first stop for me, if we have a bearish rally, if there's a lot of fear in the market, I think we can go down to the 300 and then test off of that. That to me makes the most sense. And yeah, so that would be it. If it gets really fearsome and there is no real good vaccine, and it just gets ugly, then it could go down to 61.8 down here, and then we'll see how that goes. That would be doom and gloom, especially if it breaks below that. But let's switch it from bear to bull. Let's see if there's a what would be. I'm going to do a different retracement here, assuming that we get some. So on the weekly, let's assume that we have some. So we already had a target, or almost a target net. So currently we're at 330. Actually, we had a high of 339. The 1.618 was at 340 and 50 cents. So it's just short of that, and then it just broke past that. So I think that we hit at that objective. That just gives a little more confidence in what I'm saying, that we might see a bearish turn. Um, Again, no guarantees. There's just, it is what it is. If you want to, I don't like doing this because there's no, I like to wait for a close. So this is just completely speculative. But just, just to make it a little fun, again, not financial advice. So why not have a little fun with it? And let's assume that we have this swing high to this swing low. The retracement there at a 1.618 brings us 350. First stop would be 340. So somewhere between 340 and 350 if you're bullish on the S&P 500. And but considering everything that's going on, the sell-offs, and I rather relax for a little. So yeah, that's basically my view on the weekly. On the daily, just to see how this is all playing out, should be pretty much the same, to be honest with you. We can take a look at this today's action, which is a nice low of, so we hit a high of 333 and a low of 321, which is, it's pretty decent little. Let's see how much that is percentage wise. That is near 4% in a day. Yeah, that's that freaks people out for sure. So yeah, we have to see what's going on here. It's kind of a, yeah, it's when there's so much news like this. I mean, I don't even like to guess or pretend that I know what's going to happen. 'Cause at the end of the day, nobody knows what's going to happen. So the only thing I can do is just give you my best ideas, and my best idea is that if we continue the bearish downturn, 300, if it breaks below that, then we can see 270. I think I said 275, give or take. And if we do break bullish, then what was it that I said? Let me see if I can draw it again. Draw these fibs. Between on the, well, I did before on the weekly, so now we're doing it on the daily here. So we will be looking between 334, which it looks like we actually, that was one of the marks. That's funny. So between 334 and 340. I think before I said 340 and 350. So between the 1.618 and the 2.618. So yeah, I mean, we have to see. I'm not too confident on that. We don't have much. Things are rolling over too much, in my opinion, for me to be too confident on that. We have the RSI. I guess we can keep this as a. We see that on the daily, this RSI was just broken here, so we have to see how that acts. We were pinned to the overbought section. We rolled over, and we are now going to test the 50. So we have to see what happens there. Now that doesn't really mean much because it can break down and then kind of bounce off. So the stochastic here is kind of it's telling that it just rolled over. We just got to see how much further it's going to roll over. So stochastic doesn't look like it's going to bounce up anytime soon. Again, this just happened today, this break. So yeah, it's too early. We have to see what happens closer to the end of the week, or at the very least midweek. And let's see, that's basically it. I just, yeah, I wouldn't be too, I would just stand by, to be honest with you. That's what I'm doing. I'm just kind of seeing what's happening here, and to see if some indicators give me some confluence right now. The only confluence that I get is in the monthly, mainly with that with these bearish inverted hammers, shooting stars, whatever you want to call them, and then see how that plays out via daily action. So yeah, that's basically it for my S&P 500 analysis in the last since my last update a week or two ago. So hopefully you found some value. If you liked the video, like it. If you haven't subscribed, please subscribe and share the video with people you think might enjoy it. Thanks a lot, and I'll see you on the next one.